Well, here goes Polkadot. We have 5 waves up, we have 3 waves down, and we should have already been launching in our third wave by now, but we see some hesitation, and the same story applies to the rest of the crypto coins, although Polkadot has a much more convincing setup at the moment. So ever since our May 12th bottom, we have a 1, 2, a 3, 4, and a 5, and it meets all of the rules of Elliott wave theory. We have no overlap between our 4th wave pullback and the top of our 1st wave. And it's convincing enough. We didn't quite go as high as I would have liked on our 5th wave, but you could say that that is convincingly impulsive looking. If we zoom in a little bit on what happened after the crash, it's a long way back from here, and we take a look at the micros, there isn't really a clear 1, 2 here, but you could call that a 5th wave. So I'm going to zoom back out, and if that is the case, that would be a convincing 1st wave up, and our 2nd wave would come back down somewhere between 997 and about 877. So we have enough of a dip that this would be a perfect 2nd wave down with an A, B, and a C. But if that's the case, we should have seen a launch since then. We haven't seen that materialize yet. We've been in a bit of a sideways consolidation, and there was some concern that this may have actually been a setup for some more downside. Maybe this was actually a 1st wave down, 2nd wave up with more downside. If that is the case, I do have a projection here that would take us down to somewhere between $6 and $5.44, somewhere in there. That does match up with the lower end that we would expect if we did break below the low that we hit already on the big picture chart, which we'll look at again in a second. But as of yet, we're not seeing anything particularly problematic. And when we look across our crypto galaxy, we're up about 1.5%, Bitcoin and Ethereum both. And Ethereum Classic's up over 3%. So nothing too bullish, but there's nothing immediately bearish at the moment. Now, I've been comparing our crypto coins to the stock market. So I do have the S&P 500 futures pulled up here, the ES mini futures. And since we hit another lower low on May 20th, we have a clear 5 wave impulse up, 3 wave pullback down, and we may already be launching into a 3rd wave. You see this thing starting to look a little blow off here right here. So that's a good sign. We're seeing the same kind of thing in the Dow futures as well. We're up 1.25%. So that is pretty impressive. Same thing with small caps, NASDAQ. Everything's looking pretty good in the stock market. And the reason I pulled this up is that we've seen a lot of confluence of inflection points, a lot of correlation between these two asset classes. The one place where we didn't see a correlation was when, again, the Dow, the stock market hit a lower low. We didn't see similar in the crypto space. We did pull back. This was actually on May 20th. So when we look at May 20th, we actually dipped, but there's nothing particularly concerning here. Certainly didn't have a lower low in any of the cryptos that I'm covering. So for now, we seem to be avoiding any downside. And if this starts launching the other way, that could be the end of the correction. So shifting to the big picture, we haven't had to change anything because no supports were broken. There hasn't really been much of anything going on as we've been moving sideways since our big rebound off of this bottom. This clearly looks like some kind of consolidation. Maybe this is the start of maybe a 3-wave correction for a lower low to come. Or again, maybe this is a 1, 2, and just waiting for that 3rd wave to take off. Anyway, we look at it. If we do get a lower low, it wouldn't go much lower based on the Fibonacci proportions that we have here. Again, based on the A wave and the B wave and the C wave. The C wave is often a 1-to-1 extension of our 1st wave down, our A wave down. However, because our B wave went above the origin point, this is best classified as an expanded flat. And with an expanded flat, you often see the C wave dip a little bit lower than where the A wave hit, but not too much because, well, that's a long way down. So everything's looking bullish enough to support a potential for a better rally. We're seeing the MACD curl back up. And if we get that lower low, we're probably going to have the MACD continue to curl up. So that would be a continued divergence on multiple time scales, which is what we look for to give us some confirmation that the pullback is over. So what do I expect next? Same exact thing as last time. So we want to see this thing rally. Like I said, when we have a 1-2 setup, this is a 1st wave, 2nd wave, presumably. If that is the case, then expect a 3rd wave to get us somewhere between $15 and $17, $16.76, with the ultimate top at about $18. If you're looking for a chance to buy, you could buy now. You could have bought back on the dip. If you're actually concerned that it may be a little risky, it's probably better to wait for a larger 5-wave impulse up first before you buy, because there's no perfect time to buy. What I've been advising most is if you haven't been, or if you're looking for a place to start your dollar cost averaging, good time is to start now. Otherwise, you could buy a tranche now, maybe, you know, a quarter, a third, a half, whatever you want to do. You buy that now. And if we get the lower low, you buy that as the final dip, or you wait till later. If you're more conservative, you can wait for this 5-wave rally to develop. It'll probably look a lot like this proportionally speaking. And once we have a 3-wave pullback off of that top, again, somewhere around $17 to $19, that would be a good place to buy because the upside is simply spectacular. So again, assuming this is actually a 1-2 setup, we have a lot of headroom up above, but we need to see some bullish action pretty soon. We would like to see at least a bigger impulse take us to the $21 mark. So this first wave here actually more or less correlates with what we're seeing, that matches up with what we're seeing here. So upper teens, $20 mark would give us a first wave that could take into the next month over the summer. We'll see. And we should see a dip. And then after that, we'd be off to the races in a third wave. So again, we have a lot to prove before we get to that point. We know the parameters. There's a chance for a lower low. If I see any more major supports break, then might be sounding the alarms. But right now, I don't see too much bearishness ahead, even if we do get that lower low. So that is how the cookie crumbles. Subscribe so that you don't miss any ongoing updates for Polkadot. And until next time, thank you for watching and happy trading.